And this week's quote comes from FDR. Yeah, Franklin Delano Roosevelt, former president of the United States, of course, the only president elected to 4 terms in office. And he said this: taxes, after all, are the dues that we pay for the privileges of membership in an organized society. I think a very sort of idealistic sort of view of taxes. As long as the money gets spent, where it needs to be spent, I think that's probably a very true thing, Mike.
And I think you hit the nail on the head there. If it gets spent where it needs to be spent, and that may have been true in his day, it's been far from the truth as of the last few presidential terms. But I want to talk about the different ways that a single dollar in the United States is taxed. And we're talking about, as it moves through the economy, how many times it is taxed, depending on how it's earned, how it's spent, how it's invested, how it's transferred. There are many, many ways that your dollars are taxed. The first way, obviously, is when you earn it. You have this thing called income tax. If you earn a dollar as either wages or salary, it is subject to federal and possibly state and local income taxes. And then there are those extra taxes that come out of, and they're called payroll taxes. You'll see things like Social Security and Medicare, which is listed as FICA taxes. They take an additional bite, typically around 7.65% for employees, and then 15.3% for the self-employed. So, obviously when you earn it, you're taxed. Well, then you get taxed when you spend it. Things like sales tax. If you spend $1 on taxable goods or services, you're going to have state as well as local sales taxes that apply to that expenditure. Well, then when you own the property that you just bought with money that was taxed when you bought it, after it already been taxed when you earned it, guess what? They hit you with property taxes. If you own a home or any other taxable property, you still owe an annual property tax each and every single year that you own that property. And then let's not forget about excise taxes, because certain purchases, things like gasoline, alcohol, if you're a smoker, cigarettes, those types of things have extra taxes built into their price. Okay. That's just a couple of the ways. Well, then what happens when you invest money? Well, there's this thing called capital gains tax. If you invest that dollar and it appreciates, you're going to pay tax, a capital gains tax, when you sell that asset. And then you can't forget about dividend and interest tax, because the money that earns dividends or earns interest, well, guess what, folks? Those earnings are then taxed. And then when you die, what happens when that money transfers to somebody else? Well, there's this thing called estate tax and inheritance tax. And if you leave that single dollar to your heirs, it could be subject to estate tax, whether it's federal or state, depending on the size of what you leave them. And then if you give away a large amount of money, it may count against your lifetime exemption and eventually be taxed. Okay. And you have businesses, okay? Businesses pay corporate tax if they earn $1, and it may be taxed at the corporate level before being paid out as wages or dividends. So that's before, right, you ever get it. It's already been taxed. And then the business is then subject to payroll and employment taxes before employees actually receive their net pay. So the bottom line, folks, is that the same dollar, okay, can be taxed many, many, many times, and in many, many, many different ways, depending on how it circulates.
I mean, it's so complicated when you get, this is why, the tax folks make a good bit of money and stay in business, all year round, not just leading up to April 15th every year. The tax system can be very, very complicated depending on your particular situation in life. Again, you said, mentioned the differences between how your income is taxed if you are self-employed versus you work for, a company that gives you a W-2, or, if you are a business, how you're taxed on the payroll, and then you're taxed on the purchases and the imports and the exports and all that. Like it's a lot. And so, it really is, I think people sort of know in sort of the abstract that it's complicated, but actually hearing it all spoken out like that, you're like, oh my gosh.
Yeah, and what this means is that the government, no matter if it's local, state, or federal, is taking a piece of every single dollar that you earn at nearly every single stage in its entire lifestyle in or life cycle rather. And when it comes to your retirement income, guess what, folks? More bad news. Your that same dollar can be taxed multiple times depending on where it comes from, how it's used, and the types of retirement accounts involved.